Okay, I just recently made a decision to buy some shares in Costco, and I want to share with you my mind map or my thought process that I went through to make that decision to buy Costco. And usually, for every time I'm considering evaluating a company and evaluating the stock as an investment opportunity, I ask myself essentially the same questions over and over again. And I'm just basically going to go through these questions because at the end of it, you should have, I feel like, have a much better idea or a much better comfort level if I'm going to end up buying or selling the stock. So let's just go through it as it pertains to Costco. So, first question I usually ask myself when I'm looking at a company and when I'm looking at Costco is, what do they do? What do they sell? What are the product services that they sell? What is their value proposition? What makes Costco a unique business and something that's worth considering as an investment opportunity? So when we look at Costco, they they essentially do, when you look at them, essentially what they are is as purest element, they're a grocery business. They are in the grocery business, and also they sell some basic merchandise, mass merchandise kind of stuff. The kind of the uniqueness of Costco is they tend to offer lower prices. Their goods tend to be cheaper, but the trade off is you have to buy in bulk. They sell things in bulk. So instead of you can go to Costco to buy a tube of toothpaste, you're not going to be able to buy a single tube of toothpaste. You'll have to buy a 5 pack of toothpaste. And the logic being is the more you buy in bulk, the lower price you're going to pay. The other side of it too, in terms of their value proposition, is you just don't go walk into Costco and buy something. You have to be a member. So they charge a membership, an annual membership fee of between $60 to $120 a year. So for the privilege of being able to shop and buy things at a lower price. So that's their gig, and that's how they distinguish themselves, which is quite different from a traditional grocery retailer. Second question I ask with respect to Costco is, who are their competitors? Who are their main competitors in their space? And essentially what they're doing is their traditional competitors are going to be your grocery stores, like your Loblaws here in Canada, Safeway, that kind of thing. And it's going to be also the traditional retailers, and that's where you'll find your Walmarts, your Target, your Safeways, Loblaws. But then you're going to have that online component too now, which is a factor, and that's where you have your Amazon coming into play. So those are kind of their main competitors in the space. Who goes to shop? Who shops at Costco? Well, basically, a few different types of people shop at Costco. First, a big group is families, especially large families. Families who are kind of going through and constantly needing to replenish their groceries, and because they're just going through it at a much faster rate, they just need to replenish at a faster rate. So Costco is appealing because they can buy things in bulk and not have to replenish as frequently, and also at the same time they can save money. So this that kind of replenish factor. It's just much more economically a better deal for them to do that. Another group of people that shop at Costco are small businesses, because the whole wholesale aspect of the company, because they sell things in bulk and they sell at a lower price, they can buy things there and sell it in their own establishment or a company or whatever. They do that. Then there's the third group of people who are kind of are consumers, but kind of like who like to shop for sport. And these are people. One thing, interesting things about Costco is they offer very unique, interesting kind of products and goods, and a lot of times they're so interesting enough that they can kind of be that impulse buy, create that kind of impulsive buy. And a lot of times when you walk in, first thing you do, you walk into Costco, there's that whole section at the start where they offer these really interesting goods and gadgets and kind of tchotchkes and stuff like that, that people go, oh, that's really cool. I think I need something like that, and they just pick it up. So a lot of people do that because they just kind of want the thrill of the hunt to find some kind of unique kind of good or product that they don't have, that feel like they're getting a value. There's a value to it, to owning it. So those are the type of so those are kind of the three types of people. Now the question also is, when you're looking at who the customers are and their clients are, is great, they go shop there, but will they go back? Will they come back over and over again to buy it? And the question, and the answer is yes, with respect to Costco, because of that staples nature. They're selling staples kind of products, so and goods. So chances are they're going to be coming back to replenish those goods that they need. The thing about the customers also with Costco, and I think because of this value that they offer, there's a high level of loyalty to the company, to the company. And you can easily tell that. You can just eyeball it and just go to a parking lot. Just try to park there on a weekend. It's pretty hard. It's pretty hard to find a parking spot over there. Now, that's great. Seems like a really interesting company so far. But ultimately, we got to ask ourselves as investors is, are these guys making money? Is this business profitable? So when we start looking at their performance, their financial performance, if we look at their return on invested capital, over the last 3 years, they've come in between 22 and 23%, which is really good, which is really solid, considering when you look at the grocery business, the food business, food retail business, it's very low margin. And then when you compare it to their cost of capital, which comes in about 9 to 10%, means they're making tangible economic profit. They're creating tangible wealth. And what makes it really even more appealing is the fact that, again, this is a low margin industry, low margin business, that they're able to still generate these kind of returns is pretty amazing, is pretty impressive. And a lot of it has to do, and a lot of that profit, that extra margin that comes into play, a lot of that has to do with their memberships. That really gives them that buffer and that consistent stream of cash flow that really kind of puts the company over the top with respect to the profitability side. Next thing I want to look at with the company is their financial position. What does their balance sheet look like? Is it a strong company? Financially, is it a strong, durable business? So when I look at Costco's balance sheet, from a debt perspective, their debt equity ratio comes in at about 0.11. So they have very, very low debt, which again is really a great thing you want to see in a business. They have pretty good cash levels, but their cash level is so high that it's actually, they have enough cash on hand that if they wanted to just pay off all their long-term debt, they could do it. They have enough cash. They have more than enough cash to pay off their long-term debts, which is, again, another good sign of a really strong business. They have very little to no intangible assets. So you can look at the quality of the company's assets to be really strong. So financially, this is a really pretty strong business. Now, so far it seems like it's all good with this company, but always we want to look at also the potential threats that could impact the company negatively, the risks associated with the company. So are there any risks associated with the business, with the Costco business? And there are potentially a few things. And one thing they've kind of received a lot of criticism about is their online component. And a lot of people say that their online component is kind of underwhelming. The experience is very underwhelming. And people say it's underwhelming because they worry a little bit because of the whole Amazon threat, because Amazon is kind of like got them in their crosshairs. And if Amazon were one day to start selling bulk kind of goods through their website, that could pose a threat to erode some of Costco's profits and margins. So, and especially that thought has gone ratcheted up as a result of Amazon going out and buying Whole Foods, which now gives them an instant distribution channel and instant, access to a whole ton of stores now, which are very close by and closer proximity to Costco. So it puts them in a better position to actually physically compete from that side of it. So a lot of people are worried about the online component, but it seems like the company itself isn't that focused. They've consciously, as part of their strategy, tend to prefer the bricks over their clicks, over the clicks model. So that element, this element is there. But again, as we look at the way the company is continuously to perform financially, the continuous loyalty factor in the business. If you just go to a Costco, this the foot traffic in there is just unbelievable. It's what they're doing right now is more than doing the job. They seem to be fine, and some of these risks may not be as a big deal as maybe a lot of people are making it out to be. Make no question, it's out there, and there could potentially be some erosion, but there's no reason why, if the company upped their online presence, that they could easily compete against a company like an Amazon or even a Walmart or a Target from that perspective. So finally, the next, so far everything seems to be good with the company. It seems to be a pretty solid, well-run business, is generating good profits, strong financial position. Now, the question ultimate, that doesn't mean you go out and buy the stock. You still have to figure out, okay, is the stock cheap, or is it trading at a discount, or is it expensive? Is it really maybe not a good time to go in and start buying the stock? So when you look at the stock so far, it started the year over at about $180 a share, and since then to where we are right now, it has dropped to almost about $150. So the stock's been going down. A lot of it has got to do with, again, the whole Amazon impact and the Whole Foods impact has kind of put a lot of pressure on the stock price. Despite the fact that it's still at 150, the stock is still it's not cheap. It's still not a cheap stock. And that's kind of okay, and that's to be expected, because companies that are well-run, well-managed businesses are going to trade. They're going to trade at a little bit of premium. They're going to be a little bit more pricier than we may really want to pay for it. If you're looking at it from a perspective in terms of multiples, if you're looking at their forward PEs, it's current right now, the company is at about 26. And if you're looking at companies like Walmart, they're trading at about 18. Target is at about 13, and Amazon is at about a bazillion. So it's a fairly expensive stock compared to other similar kind of retailers out there. But again, as we can see, it's a pretty high quality, a pretty high profit, high cash flow generating business, solid financial position, very loyal customers that are really like the value proposition that the company is offering. So when it came down to it, when I was trying to figure out whether I wanted to buy this thing, I thought, the stock is a little pricey, but one of the things with kind of stocks that are traditionally expensive is if they do fall in price, those are kind of the times you may just want to jump in. So when the stock fell from 150 to about 151, I thought, I think there's some value that it could gain from buying it in at the 150 level. So that's really what I did. I ultimately made a decision. I bought a small position, and if the stock fell even further, I would probably go out and buy some more. But when I looked at the fact, again, strong business model, strong customer loyalty, they're lining up and parking, they're willing to stand in line forever to get in this company. In terms of value proposition, they're getting people perceive as having a good deal, generates strong returns despite the fact it's in a business that's a low margin business, strong financial position, strong balance sheet, a lot of generating thrown off cash like nobody's business. I think I came to the conclusion that, $150 a share is probably a decent entry point to come in, and maybe there's a good 10-20% upside to holding the stock. So I took all these factors into consideration, and then ultimately I made that decision that I'm going to buy.